Tesla now has over $26 billion worth of short positions. This is up over 55% in the last 3 months, and it looks like short sellers bit off more than they can chew. Let's talk about Tesla this week and beyond. Where is Tesla going to go? We just broke out above a key technical level in which I do want to discuss with you here in this video. Not to mention BYD just launched a competitive model to Tesla in China, as well as Mark Zuckerberg launching a competitor to Twitter. Let's go ahead and get into all of this information. But before we do that, if you like to make money and you want to make more of it, if you want to grow your net worth, if you want to reach financial freedom as quickly as possible, or just stay up to date with everything happening in our markets, as well as with Tesla stock on a day-by-day basis, hit the like button and subscribe to the channel. BYD just unveiled the Denza N7. This is in their Denza class of vehicles. This is a direct so-called competitor to Tesla, and they priced it according to that. Almost identical pricing to Tesla in China. This model starts at $41,800 on the low end and $52,600 on the high end. Tesla is about $38,000 on the low end and about $51,000 on the high end, so almost identical pricing. And BYD did disclose they have 20,000 pre-orders for this new model. Barron's goes on to say this is a two-horse race. Though BYD is growing faster than Tesla, both companies are outperforming the wider market and have increased their share in the first half of 2023. The market is so large in China, there can be multiple winners, and BYD only growing slightly faster than Tesla in China. Cathie Wood disclosed on Monday that they sold 25,806 shares of Tesla in the flagship ARK Innovation Fund, worth more than $7.2 million, while the ARK Next Generation Internet ETF ditched about 3,500 shares worth $1 million. Cathie Wood still has an allocation to Tesla in her main fund, ARK Innovation, of 11.63%. This is higher than her 10% targeted single stock allocation. And they're selling stock. This is quite simple. Cathie was buying Tesla when it was in the $100 range. Tesla's went up a lot in value. It's become a larger portion of their portfolio. They're reducing some exposure here, as any good fund manager would, but you don't need to draw any conclusions from this. And if there's any conclusion you should draw, it's what a lot of you have pointed out in the comment section. When Cathie sells, that usually means Tesla is going higher. For whatever reason that is, that's how things tend to work out. Tesla stock has been doing just that, breaking out to the upside. Tesla stock was up another almost 7% on Monday, and we broke above this key level. This is a downtrending line, connecting the peaks of every rally that we have seen since November of 2021, and you just broke above this yet again. This could signal some longer-term upside, potentially pushing us well past 300 and closer to that 350 level. The RSI resetting back to a normal range could also fuel some of this upside, not to mention a potential short squeeze as well as a gamma squeeze. In the weeks of June 15th, as well as far back as June 1st, Tesla was overbought, and it can stay in overbought territory for quite a while. But you've seen a reset. You've seen the stock come down and really trade sideways for a couple of days, about a week and a half. And now you're starting to break out to new highs of this cycle, and the RSI is hardly moving. This is very suggestive that we could see higher prices very soon. Not to mention, Tesla stock rallied 7% on a half day, on lower volume than usual. We haven't even seen the full digestion from the markets around this delivery beat that we seen come out on Sunday, where Tesla delivered 466,000 vehicles compared to the estimate of 445,000 vehicles, was not even close to the highest analyst estimate. It blew past the highest analyst estimate. And that means that a lot of people got it wrong with Tesla, and demand is no longer a question. Big story will become margins, and it looks like margins should have improved a little in this latest quarter, as price cuts really have stopped, and you're seeing things such as the price of lithium falling. You're seeing Tesla reducing hours of their shift, and Tesla is notoriously a very efficient business, and I'm sure they fine-tuned that in this last quarter. So from now until we get earnings coming on July 19th, you're going to see a lot of volatility with Tesla. The option activity, as well as if shorts start to cover on short positions or not, is probably going to fuel this next leg higher. The option activity is clearly targeting an upside move with Tesla in between $290 per share as high as $310 per share by the end of this week. Taking a look at the bubble chart, the largest expiration for this week for Tesla is by far the $300 call, and you've seen volume of 98,000 on Monday. For July 14th, again, the largest option expiration, or strike, I should say, for Tesla is that $300 call, seeing volume of 28,000 on Monday. And the biggest option as far as open interest for July 21st is the 250 call. Most of these break-evens are over $300 per share or close to it. And the next highest strike is that $300 call with an open interest of 27,000 and seeing volume on Monday at about 18,000 for the day. This can fuel a gamma squeeze higher as options start to go into the money and as market makers have to start buying Tesla stock to hedge out the calls that are currently being bought. Mix that with analysts being completely wrong on Tesla deliveries and likely needing to raise their estimates as well as their price targets, in which you've seen a lot of price target increases on Monday. This can fuel a lot of FOMO and optimism for Tesla. And even if people don't go out and buy the shares themselves, a lot of people are going out and buying those options. In the past week, you have seen 6,000 option trades from hedge funds and institutions that are flagged as interesting flow sentiment. This has nothing to do with retail. This is all hedge funds and institutions. 6,000 orders, that's extreme for any option chain. And Tesla is the extreme of any option chain. The dollar amount on this was $1.71 billion with a positive order value of almost 60%. So it's clear and concise. People are betting for an up move in Tesla. Short sellers lost over $2 billion on Monday alone when Tesla stock gained about 7%. The dollar amount that is currently sold short in Tesla stock is $26.21 billion. This is the highest that you have seen in the last year, and this is up 56.5% in the last 3 months. Over the last 12 months, this is up 50%. 12 months ago, you had $17.5 billion worth of short positions in Tesla when Tesla was not performing nearly as well as it is today. So, what does that mean? Every dollar Tesla moves higher from here, it's costing shorts hundreds of millions of dollars, around $100 million to be precise, a little bit more than that. So those losses are going to start compounding very quickly. The amount of shares is at an over 2-year high as well, sitting at 96 million shares sold short. You have not seen that in 2 years. You have to go back to July 15th of 2021 to see more than 96 million shares sold short. So even if you don't get a blow-off top short squeeze, mix that with a gamma squeeze and some shorts needing to cover short positions, that's where if you break above 300 per share, you could start to exponentially rise from there and start to breach over $350 per share pretty quickly. Now, I think a big question is going to be margins on the earnings report. And once we get that information, if that is positive or better than expectations, boy, you want to be invested in Tesla at that moment. So it looks like from my perspective, we have a pretty clear path to $300 per share. You could break that pretty aggressively. If you do, you could rally up to about $350 per share. The next biggest catalyst will be earnings, and that will decide Tesla's fate from there. But this week looks to be a strong week for Tesla. Now, economic data coming out this week could also help fuel a rally with Tesla or help dampen down a rally with Tesla. And coming tomorrow morning, you're going to get factory orders coming in at 10 o'clock in the morning. We're expecting a 1.5% month-over-month reading for factory orders for the month of May. Last month's reading, which would have been for the month of April, was 0.4% positive. So you're expecting a nice increase in factory orders for the month of May. FOMC minutes come out at 2 p.m. Eastern Standard Time as well. This, as you know, is a transcript of the last Fed meeting. You can sometimes get new information. Markets usually react pretty volatile at first. To see a 0.25% up or down on the SPY or the NASDAQ is pretty common, but you usually don't get a continued sell-off based off of this. So it actually tends to be a pretty bullish thing, as markets always fear the worst, and we don't get a worst case scenario out of the FOMC minutes all too often. Thursday, you're going to get ISM Services PMI. You're expecting that at 50, so right at neutral, neither contractionary, neither expandatory. 50 is a key number. If you come in higher than 50, considering services is such a large portion of inflation, markets might see that as negative, but you certainly don't want this to crater as well. This data, you really want to see it come in line with expectations. JOLTS job openings as well for the month of May. This data will also come in at 10 o'clock in the morning Eastern Standard Time, 7 a.m. Pacific Time. You're expecting 9.9 million job openings. To see this fall to around 9 million, that would be very encouraging. Fed Jerome Powell says there's two ways to cool down the labor market: reduce the amount of jobs or reduce the people that are working at a job. And obviously, if you could just bring down the job openings, that's better than having people actually losing their jobs. So you want to see that one come in a little bit weaker than the 9.9 million estimate. Friday, that's going to be your big day, and you're going to get non-farm payrolls for June. You're expecting a job add of 250,000. Last month's reading was 339,000. So, you want to see this come in low, but you don't want to see it too low where the markets start to expect a recession. You don't want recession fears to start coming back to life. That's what you don't want to see. Now, the unemployment rate ticked up sharply last month from 3.4% to 3.7%. You're expecting this to hold steady at 3.7%. If it goes a little higher, probably not a big deal. If it comes back lower, people are probably going to get more excited about that potential soft landing. And the last bit that we need to cover here in this video is Mark Zuckerberg trying to compete with Elon in the only way that he knows how, and that is through social media, because of course, he's not getting in a ring with Elon, okay? Threads is Instagram's owner to launch Twitter rival on Thursday. So this is actually launching this week. I don't expect this to be a negative for Tesla. We'll see how Elon reacts to this. If advertising slows down at Twitter, he could be forced to sell more Tesla stock, and he could be forced to invest more into Twitter. Although I don't think this is a near-term concern, but could be interesting to watch and see how Tesla stock reacts to it. That is going to do it for this video. Let me know what you are doing for the 4th of July down below in the comment section, as well as how you think Tesla is going to move this week and what kind of trades you currently have on Tesla stock, I would love to hear that information. On top of that, if you want to take it a step further and come trade with me in real time, every time I make a trade, I send out alerts. Link down below in the description of this video for that. Or if you just want to sign up for Webull and deposit $1 and get yourself 15 free stocks, that is also very easy to do. Throw a couple free stocks my way, help support the channel in that form as well. Nonetheless, you guys enjoy the rest of your day, and I will see you in the next one.